Let's face it, trying to pick individual stocks is like trying to predict the weather in a foreign country without knowing the language. You may as well be throwing darts. That is why ETFs, mutual funds, and index funds exist. Think of it as your financial umbrella built to keep you dry during all market downpours. But what's the difference? Are they friends? Enemies? Do they fight crime together at night? Imagine the stock market as a giant buffet. There's so much to choose from: stocks, bonds, commodities, and much more. But here's the problem. If you try to fill the plate yourself, you might end up with a weird combo that gives you financial heartburn. That's where ETFs, mutual funds, and index funds come in. They are like the pre-plated meals of investing: balanced, diversified, and stress-free. Think of it this way. Exchange-traded funds, also known as ETFs, mutual funds, and index funds as the Netflix of investing. Instead of buying individual movies or stocks, you get access to an entire library of content, aka diversified investments, for one low price. Whether you're into action, aka growth stocks, drama, dividend-paying stocks, or documentaries, bonds, there is something for everyone, and you don't have to break the bank to enjoy it. Well, let's meet the players now. Exchange-traded funds. These are like fast food combo meals, like your regular McDonald's meal deal. You get a little bit of everything: stocks, bonds, even international flavors at a low price. Super quick, super easy. Why they work? ETFs are easy to buy and sell, just like grabbing a snack from a vending machine. They trade on stock exchanges like individual stocks, so you can buy or sell them throughout the day. Let's talk about the FTSE All-World High Dividend Yield ETF. It has 2,148 stocks from UK, US, some countries in the EU, and a little bit of Asia. That's diversification. Peter Lynch, a legendary investor, once said, "Know what you own and know why you own it." ETFs make it easy to know what you own because they are transparent and straightforward. Moving on to mutual funds. Mutual funds are more like a home-cooked meal made by a chef, aka a professional money manager. You give them your money and they decide what to cook or what to invest in for you. They are great for people who want a pro to do the thinking. But remember, chefs charge for their skills. Mutual funds often come with higher fees and they are not as flexible. You cannot buy and sell them during the day like ETFs. Case in point, let's look at Fidelity Contrafund, a mutual fund that focuses on large US companies. Let's talk about the last player in the game, index funds. Now, index funds, these are like meal kits. You know, the likes of HelloFresh, Blue Apron, Gusto, Mindful Chef, Marley Spoon, iChef, Zesty Kitchen, My Food Bag, Hello Chef, You Cook. I could go on and on and on. Everything is picked out and prepped. You just follow the steps. Super chill. They follow the market. like the S&P 500 or total stock market. No trying to beat the market, no drama, just slow and steady wins the race. Slow and steady. Think of it like public transportation for your money. You hop on, ride with a bunch of other stocks that follow the market as they hop on, and they go wherever the market's heading. You're not the driver, you're just along for the ride. Now, let's talk about the Vanguard S&P 500, the Rolls-Royce of index funds. It's like having a slice of Apple, Amazon, and 497 other giants in one place. Alright, so how much is this gonna cost you? Well, Benjamin Franklin said, an investment in knowledge pays the best interest. So don't forget to check the actual fees too. High fees can quietly eat away at your returns, like that daily $6 coffee you swore you'd stop buying after New Year's. ETFs and index funds usually have lower fees. Mutual funds, not so much. So, which one is right for you? It really depends on your style, but here's the quick and dirty breakdown. ETFs, great for people who want to be a little hands-on, buy and sell whenever, cheap and flexible. Mutual funds, good for long-term investors who want experts doing the heavy lifting. Higher fees, but you get guidance. Index funds, perfect if you want to set it and forget it. Super low cost, very chill, and easy to stick with for years. If you're trying to decide what to do, take what Warren Buffett said to heart. The stock market is a device for transferring money from the impatient to the patient. Translation: be chill, be patient, have a plan, stick to it. Let time do the work. Okay, people, don't bury your head in the sand like a financial ostrich. Learn the basics, take control, and start investing. Your future self will thank you. John Bogle, the creator of index funds, said it best. Don't look for the needle in the haystack. Just buy the haystack. That's what index funds let you do. Buy the whole thing. No need to stress about picking winners. So, there you have it. Now's not the time to become a financial ostrich. Get educated about your financial future and start building it now. Thanks for hanging out with me today. If this helped clear up the fog of investing, hit that like and subscribe. Until next time, invest smart, stay curious, and don't forget your financial lunchbox.